What if Iran war equals $180 oil? Iran sparks the next financial meltdown. Imagine this. You wake up tomorrow, and the first headline you see is one word: Iran. Missiles, retaliation, markets in chaos. Your feed explodes, red everywhere. Oil up 25% before you even finish your coffee. Stocks crashing across Asia, Europe, the US. And all of it started while you were asleep. One strike, one decision, one region the world thought it could control. Iran doesn't just hit back on the battlefield, it hits where it hurts most: money. It threatens the one thing no one was prepared to lose: stability. Iran signals it could choke the flow of oil, not by destroying it, but by making it too risky to touch. Tankers rerouted, insurance costs exploding, shipping lanes suddenly look like war zones on a map. The world's most important commodity turned into the world's most dangerous asset. Traders don't wait, they panic. Everybody rushes to buy oil at any price and to sell everything else. Overnight, the safe bet becomes the risk, and the risk becomes the new normal. Your favorite stocks? Bleeding. Your safe index fund? Redder than ever. The algorithm-driven funds start dumping, not because they know what's happening, but because they're programmed to fear one thing: volatility. And this isn't just volatility. This is a system shock. Central banks call emergency meetings. Finance ministers go live on TV. They tell you to stay calm. They tell you it's temporary. They tell you they have it under control. But oil doesn't listen to press conferences. It listens to fear. It listens to risk. It listens to the possibility that one country, in one region, can squeeze the entire planet with a single move. The meltdown doesn't start in a bank. It doesn't start on Wall Street. It starts in your head. In the moment you realize that everything you thought was far away can hit your wallet in a single trading day. This is just the first 24 hours, the panic, the rush to safety that isn't safe anymore. If this is how day one looks, what happens when oil truly becomes a weapon? What happens when Iran doesn't just move markets, but rewrites the rules of the global game? Stay with me, because in part 2, we go straight into the oil shock and how it turns a regional war into a worldwide economic crisis. Day 2. Oil doesn't sleep. It's at $120 a barrel. Yesterday was panic buying. Today is pure desperation. Iran tightens the noose. Tanker traffic through Hormuz down 40%. The world suddenly remembers 20% of global oil supply flows here every day, every hour, every barrel counts. Gas prices spike overnight. $6 a gallon in the US, €3 per liter in Europe. Airlines ground flights. Trucking companies halt deliveries. Factories idle without fuel. Shipping rates triple. Your Amazon package now costs triple to ship. Food prices jump 15% in a week. Inflation not coming back. It's here. Central banks raise rates to fight fire with fire. But higher rates mean higher mortgage payments. Businesses borrow less. Consumers stop spending. Retail sales plummet. Layoffs start. First the truckers, then the warehouse workers, then everyone else. Governments pump money, but oil eats it all. Every stimulus dollar chased by 20 more in energy costs. The real economy cracks, not from debt this time, from fuel. This isn't 1973 or 2008. This is supply chain plus inflation plus war, all at once. Oil isn't just expensive now, it's leverage. Iran knows it. Everyone else scrambles. Day 2 ends with one truth. No oil, no economy, no excuses. Coming up, when banks start breaking. Day 3. Banks wake up sweating. Oil at $140. Their portfolios, trillions tied to energy companies, airlines, shipping firms, all underwater. Bond markets freeze. Yields spike 2% overnight. Investors demand safety, but safety doesn't exist anymore. Emerging markets collapse first. Turkey, Egypt, Pakistan. Their currencies lose 30%. Oil import bills triple overnight. IMF lines form. Dollars evaporate. Even the big banks wobble. European banks hold $500 billion energy debt. U.S. regionals overexposed to oil states. Margin calls hit at 9 a.m. Fire sales begin. Treasuries no longer sacred. Foreign holders pull back. Japan, China, Saudi Arabia, all rethinking USD. The Fed injects $2 trillion. By lunch, it's gone. Crypto surges. Gold hits $3,000. Everyone runs to hard assets. But digital gold can't fuel your car. Supply chains snap. Parts shortages. Production halts. Apple, Tesla, Boeing all issue warnings. Force majeure. Day 3 truth. When banks stop lending, economy stops breathing. Credit markets seize, like 2008, but faster, more global. Coming next, jobs vanish, businesses die. The real pain begins. Week 2. The real economy breaks. Oil steady at $150. Gas stations run dry. Lines form. Fights over the last gallon. Airlines cut 50% of flights. Ticket prices double. Trucking firms park fleets. Supermarket shelves empty. Fresh produce gone. Imports halted. Factories shut down. No parts, no fuel, no workers. Layoffs hit 10 million. First wave. Construction stops. Steel mills idle. Chemical plants offline. Small businesses lights out. Rent due, no customers. Governments step in. Price controls, rationing, emergency powers. But black markets thrive. Gasoline at $15 a gallon, cash only. Inflation hits 12%, official number. Real number, double that. Wages freeze, savings evaporate. Retirement accounts down 40%. Pensions cut, social programs strained. Protests grow, every major city. Week 2 reality. Energy isn't luxury, it's oxygen. Cut the supply, everything suffocates. Governments borrow trillions to keep lights on, but debt markets close, no buyers left. The system designed for abundance wasn't built for scarcity. Week 2 ends with one fact. Modern economies run on oil. Stop the oil, stop the world. Next, who wins? Who loses? The new pecking order. Month 1. The winners emerge. Oil at $180. Russia laughs. Saudi Arabia prints money. UAE skyscrapers multiply. US shale rigs work 24/7. Canada, Norway, Brazil, all pumping max. Defense stocks up 300%. Raytheon, Lockheed, Northrop, rocket fuel. Gold at $4,000. Silver crushes records. Bitcoin, 250K. Digital gold goes nuclear. Nuclear energy stocks explode. Uranium at all-time highs. Battery makers feast. Tesla, CATL, Panasonic. Supply can't keep up. LNG terminals race to build. Qatar, Australia, US Gulf Coast, the new oil kings. Losers, Europe freezes. Germany rations gas. France blackouts weekly. India starves for fuel. China scrambles. Japan imports 90% of oil. Economy shrinks 8%. Airlines bankrupt. Boeing deliveries halt. Chip factories starve. iPhone production stops. The world splits. Energy haves versus have-nots. OPEC Plus fractures. Russia versus Saudi proxy war. Prices swing wild. One day $200, the next $140. Markets addicted to chaos. Hedge funds feast. Retail traders crushed. Month 1 truth. Crisis creates kings and kills peasants. Power shifts fast. Old rules burn. New empires rise. Coming next, the real question: what do you do now? This isn't fiction. This is math. 20% of world oil. One choke point. One decision away. Iran taught us, oil isn't just fuel, it's power. The system runs on it. Stop the flow. Stop everything. Governments will print. Banks will bail out. But you'll feel it first. Gas pump. Grocery store. Next month's rent. The question isn't if, it's when. And when it hits, will you be ready or watching from the sidelines? Like if this woke you up. Please drop a comment. Oil shock coming? Hit the bell icon. Never miss the next warning. Share this now. Someone you care about needs it. Because when markets melt, knowledge is survival. This channel, your early warning system. Subscribe. Turn on notifications. Because the next crisis won't send you a calendar invite. It hits fast, like today. Stay ahead. Stay informed. Stay in control. Wishing you a warm and pleasant evening. Thank you for watching. Sincerely,